demo on getting stock ideas. So I try to look at two stocks. So I think now this time round we have a group of newbies. So maybe I just want to do demo on getting stock ideas. So let's say I want to buy a stock, invest in stock, but I don't know what to do. So I can actually use stock screener to help me. So this is what I did here. I go to stock screener. I put on a growth filter. Hope you all can remember. PE less than 20, ROE more than 15%. I'm a bit greedy. Then after that, I also put in the income filter. Given you more than 4%, market cap more than 500 million. So this is try to search for potential growth stock with good dividend yield. And yep, after that, I sort by market cap. So something that caught my attention is HRnetgroup. HRnetgroup. HRnetgroup that actually caught my attention. Okay, so what I'm trying to say here is this. So let's say, for example, usually I have a team, team as in THEME. Okay, let's say, for example, oil and gas, I want to invest in tech. That's one way. But if let's say I have nothing in particular, I just want to try to search. So I actually use filter. Okay, this is what I do. Okay. Now, HRNet, what do? They're basically a recruiter. So these are some of the brands. Okay. Some brands that we may be familiar with. Like Search Asia, People Search. And they actually have 13 brands. So by the way, they are actually in 15 Asian cities. So not small. So quite a big recruiter. Okay, when I actually read the chairman's statement, unfortunately, there is no very clear growth story. Okay, don't have a very clear growth story. So in that sense, I have to just see as an income stock. Okay, so remember, if you want to invest in growth stock, most important is to find a growth story. So in this case, even though I'm a bit greedy, I try to filter out based on see whether can be a potential growth stock with good dividend yield. But eventually, net, I only find probably like an income stock. So their dividend is actually quite consistent. Okay. I do the 6 tests. Again, can I just trouble you all to help me see, did they pass the 6 tests? Did they pass the 6 tests? Yes or no? Anyone can help me? Thank you so much. Pass the 6 tests. Profit past 5%, yes. Current ratio more than 1. This one less than 2. That profit more than 5%. Interest cover more than 3 times. So yes, pass the 6 tests. So business, I'm okay, even though it's actually don't have a clear growth story, but it's a good income stock. By the way, their profit profile very nice. Come out very nicely. Okay, then after that, pricing. Current price is 74 cents. Number one, I look at dividend yield. I compare with past 5-year average. Current dividend yield is 5.44. Past 5-year average is 4.283. So in this case, is the stock cheap or expensive? Cheap or expensive? Current yield 5.44. 5-year average 4.28. Okay, cheap. Thank you so much. So previously you can get 4 point something percent, now you can get 5. So okay. So P ratio 10 times your cut, okay. Price to book is not relevant here. Now, before I go to DCF, I just want to explain this thing about net debt. Net debt. What exactly is this net debt? So this is actually something, to me, it's actually quite good when it's negative. Okay, what is actually this net debt? And it's minus. So if you mouse over the question mark, okay, I'll have to click. Sum of all short-term debt, notes payable, long debt, minus the total cash equivalent. Okay, so basically this net debt was you take all the debts minus the cash. Okay, and it's still negative, means this company got more cash or more debt. Thank you so much. It's actually quite cash rich. It's actually quite cash rich. So in fact, negative is actually quite good. So again, this is a plus point for me. Okay. So this company, I realize you can look at it, okay, very low loan. Very low loan. So of course, in this case, as the risk of bankruptcy is actually very low. So in fact, I actually look at them further, they in fact don't have much debt. Now, one thing I did extra is I did a DCF. Okay, again, I will send the DCF spreadsheet to you all. So the DCF spreadsheet looks something like this. Okay, so I actually go and collect the past 5 years numbers. So you can see that actually their profit is a very nice uptrend, go up very nicely. The revenue is also going up quite nicely. So this is the pattern I like. And based on the DCF, okay, so what I did is with the past 5 years future, then after that I discount, okay, based on the DCF, I actually get the fair value of $1.11. Okay, $1.11. And if I take 10% discount, is $1, $1. Okay, by the way, I am putting very conservative assumption. Usually I use like average of past 5 years growth rate to forecast the growth. But I'm actually very conservative. I only use the last year growth about 3.6%. Okay, and yet I still can get this fair value. So basically, the fair value for this counter based on DCF is about 111. And it's exciting for me. It's actually below $1. And yes, the price is 74 cents. So that's one additional thing I do to help to vary the price, not just look at PE, didn't you? I also did a DCF exercise. Okay, I will send a spreadsheet for you all to understand better.